Welcome to this explainer. So, if you're stepping into the trading world, you probably already know about the massive bridge you've got to cross right out of the gate. Choosing the right broker. Your broker is absolutely the essential middleman between you and the financial markets. They're the ones providing the platform, giving you the prices, and literally holding on to your capital. So today, we're going to walk through the ultimate 7-point broker selection checklist to make absolutely sure you're setting yourself up for success from day one. Here is our roadmap for today. We'll start with the overall broker selection checklist, move into safety first through regulation, managing deposits and spreads, mastering leverage and demos, looking at support and trading platforms, and finally making your final broker decision. By the end of this, you'll know exactly how to find a legitimate, beginner-friendly broker. Section 1. The broker selection checklist and why your choice matters. Listen, finding a broker who actually wants you to succeed is completely critical to figure out before you place a single trade. It's the difference between a frustrating, incredibly expensive experience and a seamless educational one. Like the quote says, choose the wrong one and you could lose money to scams, hidden fees, or terrible customer service. There are essentially 3 tiers out there. You've got outright scams that are totally unregulated and will literally steal your money. You've got legitimate but super expensive brokers who'll bleed you dry with hidden commissions. And then you have legitimate beginner-friendly platforms. We're going to make sure you only ever land in that third category. Moving to Section 2, safety first through regulation, the absolute non-negotiable. If a prospective broker fails this first security step, honestly, the remaining 6 criteria on our checklist just do not matter at all. You absolutely must not deposit your hard-earned money with an unregulated entity. What you really want to see is regulation from top-tier legitimate authorities. We're talking about the FCA in the UK, ASIC down in Australia, or CSEC in Cyprus. If a broker is regulated by organizations like these, they are forced to follow incredibly strict rules that are specifically designed to make sure your money is protected and kept completely separate from the broker's own operational funds. Seriously, if you don't see regulatory bodies like these listed, stay far away. Section 3. Managing deposits and spreads. Protecting your wallet. Okay, so for your initial deposit, you really want a low minimum, ideally less than $100. Some great platforms out there even let you start with just a single dollar. Now, why is this so important? Because when you're just starting out, you're in a learning phase. You shouldn't be forced to risk hundreds or thousands of dollars while you're still building your skills and testing out your strategies. A good broker actively wants you to start small. Now, understanding this spread is just as crucial. A spread is simply the difference between the buy and sell price of an asset, and this is exactly how brokers make their money on every single transaction. Whenever you enter a trade, you are immediately down by the amount of the spread. Therefore, smaller spreads mean you're losing far less money on each and every trade. Think of this in terms of green flags and red flags. A beginner-friendly broker offering tight spreads, which is typically around 1 to 3 pips for major pairs like the Euro-USD, is a massive green flag. On the flip side, though, if you spot a predatory broker offering spreads of 10 or more pips on those exact same major pairs, they're essentially ripping you off. You're basically going to lose money to fees before your trade even has a chance to become profitable. No way. Section 4. Mastering leverage and demos. Let's get into risk management. The financial markets can be highly volatile, and a solid broker should equip you to handle that safely, rather than just pushing you right over the edge. You want the flexibility to choose low leverage, something like 1 to 10 or 1 to 20. Having that choice is a huge green flag. But if they force you into massive fixed leverage like 1 to 500, that's a glaring red flag and a complete recipe for disaster. It shows the broker doesn't actually care about protecting your initial capital at all. A truly mandatory feature you need to look out for is the demo account. A good broker is always going to offer a free demo account loaded up with virtual money. And ideally, it should never expire. If a broker doesn't offer one, that is an immediate, glaring red flag. A legitimate platform wants you to practice, test your strategies out, and get completely comfortable with market movements before you ever risk real cash. It's like a sandbox for trading. Section 5. Support and trading platforms. The operational tools. If something goes wrong, or hey, maybe you just have a simple question, you need to know someone is actually there to help instantly. So look for 24/7 live chat support, ideally available in multiple languages with incredibly fast response times. Actually, pro tip here, you should totally test this yourself before signing up. Just shoot their support team a quick question on their website and see exactly how long it takes them to get back to you.
As for the software you're going to be staring at every day, you need a robust, reliable platform. Does the broker offer MetaTrader 4 or MetaTrader 5? MetaTrader is absolutely the reliable, powerful industry standard in trading. Now, while some brokers have their own proprietary platforms that might be perfectly fine, seeing MT4 or MT5 available is a great benchmark. It lets you know you'll have access to professional, easy-to-use software.
Section 6. Your final broker decision. Empowering your choice. Always remember, you are the client here. You're bringing the capital to the table, and brokers should be vigorously competing for your business, providing you with the absolute best possible conditions to succeed. So this right here is your screenshot moment, the complete 7-point broker selection checklist. 1. Top-tier regulation. 2. Minimum deposits under $100. 3. Tight spreads, around 1 to 3 pips. 4. Flexible, low leverage. 5. A free demo account. 6. 24/7 responsive support. And 7. An industry-standard platform. If a broker hits all these marks, you're in a fantastic position to start trading safely.
Which leaves us with one final, crucial question for you to consider right now. Take a hard look at where you're thinking of putting your money. Does your prospective broker truly meet all 7 of these standards? Don't compromise on a single one. Take this checklist, apply it objectively, and make sure you're setting yourself up for a secure and totally successful trading journey.